Let's bring in the man who knows numbers better than all of us combined. That is Bloomberg's Paul Sweeney. Paul, let's just start with the numbers. And curious if you think that the fourth quarter net additions is enough to offset some of the weaker guidance that we're getting on first quarter.
I think it is. I think what the company has been talking about now, really since the beginning of the pandemic, is how the pandemic has caused, the company to pull forward probably several years of subscriber growth into 2020. And then maybe partially into 2021 as well. But that's all good news for the company. More subscribers mean more revenue and more cash flow. And I think we're seeing that in what Romain was just reporting about the company saying it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting. That's really important for this company because they've been really burning through cash as they increase their investments in programming. And that was a concern to equity investors and creditors alike.
I mean, and they have to continue to burn through the cash. 70 original movies going to be launched in 2021. They're still very ambitious when it comes to their content. They have to be to face off the competition, particularly in the United States. How much should we be worried about that competition, Paul, or how much is there global growth opportunity here for Netflix?
Yeah, you're right. They really have been and will continue to increase their spending on all types of content, particularly this original content. You mentioned the original movies, a real big investment again upcoming this year. And it's kind of a function of the marketplace. It's become so much more competitive for them. There's a time when they were essentially the only game in town, but now just in the space of 12 months, we've had the market flooded with well-funded, high-quality streaming services, most notably the Walt Disney Company. So it's a different playground. It's a different environment. But I think most investors look at the environment and they say the streaming business, Netflix, clear winner, yes. Who is player number 2, 3, and 4? I don't know. Let's see them fight it out. But Netflix will certainly be one of those players. And I think we're seeing that in some of the guidance we're getting from the company right now about their free cash flow outlook.
Yeah, that's certainly encouraging. Paul, in the past, the card that Netflix always had in its back pocket was the idea of pricing power, the idea that they always had the ability to come back to customers and say, oh, we're going to bump you up $1 or $2 a month, and nobody would really notice, and that would help sort of bolster the bottom line there. Given the competitive landscape, do you still think they have that type of pricing power?
I don't think it's as strong as it was several years ago when, again, they faced little to no competition. Now you've got high-quality products in the marketplace, from the likes of a Comcast or an HBO, AT&T, the Disney, that have very high-quality content at competitive prices. So the market from a pricing perspective has become very competitive. So analysts and investors over the next year and a half or 2 years are really going to be looking at the churn numbers that come out of these companies. Are people switching back and forth, and are they switching because of price increases? We saw that in the cellular phone business, and we saw that in the cable television business, and there's concern about how those dynamics may play out here in the streaming business.
Paul, I'm curious about the future of this company. We heard from Disney where they were going to release on the streaming and in theaters the same day. Do you see a scenario where Netflix, too, could come to a deal with a movie theater chain where it's released all at the same time? Or do you think that Netflix truly stays with just some of their original programming?
Well, I think what Netflix likes to do is obviously release everything onto the streaming service. If they have a film that they think is eligible for an Academy Award, they will have a very limited release in some theaters because that's a prerequisite. That may change. I think all the media companies, all the content creator companies are really reassessing kind of how they release content, and that really is going to be much different. And the pandemic accelerated that process where we're more and more comfortable consuming more and more content in our homes. And I think that the streaming companies, as well as traditional movie studios, they recognize that, and we see them releasing more and more of their content on their streaming services.
Paul, I'm seeing that they're intending on potentially doing more stock buybacks. How does that fit into where they've been in the past? How much is this something that investors are going to like?
Yeah, well, they have not been big buyers of the stock because, they didn't have any cash really to do it. All the cash they had was being invested back into the company, and they had to go into the debt markets and borrow. So this just shows it's kind of concurrent with becoming free cash flow positive. When you become free cash flow positive, investors then say, okay, what are you going to do with all the cash? And usually you either pay down debt, you make acquisitions, you reinvest in your company, and after you've done all of those things, if you have any left over, you tend to buy back your stock. And that's where they're going to be beginning in 2022.
All right, and we talk about how Netflix reached this milestone, passing the 200 million paid membership mark. I am curious about the international expansion. There was a lot of talk of that maybe a year ago or 2 years ago on the conference calls. That didn't quite materialize in terms of the growth as quickly as some investors had thought. Does that still represent a good opportunity for Netflix overseas?
It does. International is going to continue to be the source of their subscriber growth. That's the good news. The not so good news is they don't make as much on a typical international subscriber in terms of revenue per sub as they do in the U.S. So it's a different profit dynamic, but they make up for it in scale here. So in terms of subscriber growth, that's still the growth story for them. However, again, they're facing competition. Disney and AT&T and and Comcast, they're releasing their streaming services internationally and globally as well. So there's competition everywhere you look, but international, as broadband continues to expand in a lot of these global markets, particularly the emerging markets, that's great for the streaming services, and including Netflix.